Welcome to Market Mastery. The 1 hour in the week you need to get moving. We forgot to do the titles today, but you could still adjust it right now.
I don't know how to. You want you?
What do you
am I
want
even
to do?
on? Am I even on?
Yeah,
right now?
we're on. We're on. Let's.
No, mine's not on. Let me do mine.
No, that's what I'm doing right now.
Okay.
So we're gonna talk about. I'm making yours.
Make mine something about bear market because I think there's a lot of fear right now. It's happening.
Yeah,
It's a bear market incoming.
Bloodbath in the market. Here's my plan.
Gotcha. Perfecto.
Saving. Boom. Now we're live. Okay, now we're on. Welcome, Market Mastery, the 1 hour you need in the market. The SPY trades last week paid over 200% return on the contracts we broke down for you. Every level hit accordingly. I'm going to give you the same ones again. Remember, these are levels you can follow for weeks and weeks and weeks thereafter. You have to be making money on this volatility. We're going to talk about a couple important things today, one of which will be giving you the SPY roadmap of what we think is going to happen in general markets. We're going to give you the exact levels we are trading. We're going to give you the exact options contracts that are going to make us money as we watch it. Then we're going to break down a method that we were just discussing of continually reinvesting in the portfolio to DCA into the right names during times like this when you get that attrition in the market where everything's falling through the floor and it feels like there's no end in sight. That's the opportune time to buy in small increments as a proportion of your income to make sure that you are continually investing. We were just talking about it ourselves that, like a kind of rule of thumb, you can get to like 1 to 3% a month. I think that's great. Or I guess you're saying a week. But I think even 1 to 3% a month is realistic. So we're going to talk about that because, again, it's not about the dollar amounts, guys. It's the percentage. So if you make $100 an hour or $10 an hour, again, it's going to be a lot harder at $10 an hour, but there's still a proportion you can allocate if you're living within your means to contribute more to the market times like this. So without further ado, let's break down this SPY real quick, and then we're going to talk about that because I think it's something that will benefit every viewer right now. So again, price action fell through and gave us some great opportunities. This is the weekly chart. Remember, we were talking about this fall off below 584. Our target was 568. Boom, hit. And then below 568, we were talking about the potential of seeing 540, 550, and yet here we are. So we're going to go to the 15-minute. We're going to look at the last couple days in summary. You can see here that the moves, we got rejected here, so we did not test 589. Right now, we're getting rejected at 567. I think that's our next test. If we go lower, realistically, we're going to have to put a larger time frame here because I'm going to have to map this level. If we go lower, we didn't bounce. For you guys on the premium stream Friday, we were talking about that potential of a bounce. I like that. 550 is incoming if we can't get it. Last week, we were talking about the potential of a bounce off of the top of this range at 563. We did not get it. So that means that we are in a position now to seek a lower floor. That's what the market will do. It will continue to push until it finds a floor in which it gets rejected, and then it comes back up. So before we break down those levels, I mean, Shay, what are you reading in this market? What are your thoughts right now with what we're seeing in front of us here? It's breaking down. I mean, absolute just capitulation from 600.
I did a post today to prove it because I think a lot of people are a little confused on what I'm saying, where I'm a long-term bull. I think we're early in the fourth industrial revolution. Could I be short-term bearish? Absolutely. And on February 17th, I posted a proof. I'm short the market. I think the market's going to pull back. When did the market pull back, Austin? February freaking 17th. 18th, 19th, whatever. Margin of error, that was a near-term top.
Right around the 20th.
It's the valuations became zero concern around that environment. I was like, this is alarming because I am really bullish on a lot of these names, but a lot of the names that don't really have a moat or any kind of competitive advantage were catching major bids. And I think there was somewhat of a disconnect on what should be going up and what should be going down. I think big tech earnings, this most recent cycle, big tech has always, their earnings has always been the floor in any kind of pullback in the market. Like those big tech names usually V-shape recovered pretty quickly. And as soon as you saw like the Mag 7 names go up green, the rest followed suit. This most recent earnings cycle, I really think big tech indicated that this is going to be an investment year for them. There's going to be minimal reacceleration on the top line to match their capex increase. There's going to be a misallocation. I won't say misallocation of funds, but like they're over investing then wondering on what the ROI is going to be. So I was like, oof, that was a really poor Mag 7 earnings cycle. It really wasn't that great. A lot of the guidances were weak. There was a lot of currency headwind issues. You can make the argument that they're guiding conservative due to the tariff wars. They really don't know how that's going to play out. So you want to go under, then stick your neck out. Whatever it might be, their earnings cycle did not deliver for big tech. So like, oof, I think the high floor we've had in the market, any kind of pullback, might be tested significantly if that is the case. But even then, like after the big tech reported their earnings, the market was near an all-time high. So I was like, am I missing something? Like I get the breadth is widening outside of big tech, but like I'm seeing a lot more risk than reward. So I did think we were going to enter a small bear market. I didn't think it was going to happen within weeks. Like I really thought it was going to happen sometime this year. I'm shocked to see QQQ down 13-14% in 3 weeks. But the writing was somewhat on the wall. And that's why we had indicated, like on this show, on my morning show, like hedging was cheap when VIX was at $14. It was really dirt cheap to hedge your portfolio for the June expiration, September expiration. I said it multiple times on here. Like it's do a 3 to 5% hedge, lose that percentage if you're wrong. Great, because you're probably gonna make more money in your long-term portfolio. But I'm willing to risk or take some off the top in order to do so. So I had a hedge. Clearly, it wasn't enough because I still felt this pullback. But guess what? I had a 12% cash position as well on top of my hedges. So like I was in a good place to capitalize on this pullback. That's why it's so important to have those dry powder on the sideline. And I think,
dude. I'm sitting at 20%.
Yeah, I mean, we'll get into portfolio management a little later in the show, but just talk levels right now. I mean, it's so bearish. I can't describe how bearish it is that we're below the 200-day moving average on the SPY and especially the QQQ, because that level was getting tested multiple times last week, and that support turned to resistance really quickly, and we got that flushed a bit today. And the worrisome level on that is we have a gap to fill, and the interesting gap that's going to be filled is close to like where the potential bear market can begin. So that's going to be a massive level. And I think we probably have 3 to 4% more downside move, but also like you got to ask yourself, like, I don't know, daily RSI is below 30 now on both indices. It feels somewhat of an oversold nature in the near term. So either way, like I'm just defensive in my portfolio. And what do I mean by defensive? Like I'm not adding to my speculative positions really. Like this is not the time to add to your speculative positions. I'm bullish on quantum. I'm bullish on space. I am bullish on like so many other growth thematics. But like I'm not putting my soldiers adding to those names. I'm adding names that have a defensible moat that is going to has a monopoly in an early secular growth trend that really isn't as risky as, I don't know, buying a ASTS, Rocket Lab, IonQ, like Oklo, like all these like great futuristic companies. I'm bullish on them, but they're speculative. And then I'm sorry, they are. Like I'm so bullish on those names, but they're speculative. It's not like I built my Amazon position now from 7% to now it's 12%. That's what I mean. Like I'm treating in a defensive environment, I'm allocating my soldiers towards those kind of leaders. I don't know. What have you been doing recently, Austin?
I'm in the same boat. I mean, I feel like I definitely made that mistake early on where I'm bought into spec on really tough market trends, and it sucks. They're good names that we love, and I understand the confusion, with people being like, hey, I love those. What's going on? But at the end of the day, it's like, again, you buy the Amazons, you buy the indexes. You that's what I do, at least. I try to build into positions that I don't want to manage, deal with, or look at, that I'm so confident that they will be, I guess, market leaders, the way you put it, which is good. I'm confident that they're going to be the market leader, that I'm not going to have to stay on top of what they have going on. Versus anything speculative, guys, anything like that, you absolutely have to stay directly in tune with what kind of news are they putting out. Like, what is their last guide? What is management doing? Like, are we paying attention to market trends ourselves and adjusting to them? In-game adjustments during their overall business cycle. Is this happening, or are they just kind of playing pretend or black boxing their stuff? Like, you got to always be mindful of all those things, especially when it comes to spec stuff, because it's going to be a very sensitive instrument, and in volatility, it's probably not going to do well. So you look at what happened a few years ago. I remember a lot of people brought this up. Hey, small caps just exploded for like 2 years. Why? Interest rates. No, money was free. I mean, first of all, they were way overdrawn, but money was free. So all of these really ambitious, forward-thinking companies that are trying to do something innovative can get money to do those things. And some of them do pay off. But at the end of the day, when money is more expensive and there's fear in the market, those names will get nothing. Nothing. And then if they don't get that they don't have much to stand on. Because when you got your Amazons, you got your Apples, like, they have a foundational business upon which their stock price is built. So when they're overdrawn, I would say you're getting a little arbitrage opportunity, because the market will typically pay that back. But it doesn't always happen, man. It really doesn't. So I think for everyone here, it's just paying very close attention to the SPY above all else, because that's going to be your forward-looking indicator as to what we're going to probably see in the general markets. And volume has been escalating, which makes this a lot scarier, to be honest. Like, a lot.
I mean, I also do think, like, we've been in a recession for years, guys. Like, it's just been masked by government spending. But guess what? Like, that faucet is no longer anymore. Like, Doge is preventing that government spending faucet that's been masking the recession we've been in the past couple of years. Like, I think a lot of people felt that disconnect from real life towards the stock market. They just did. And really it's because of liquidity that's drove the market to go up, up, up. And that, I won't say low-hanging fruit, it's just like making the government an operational efficient entity is going to come with some short-term pains. And we're experiencing the short-term pains. And you're seeing a lot of businesses front run those tariffs, front running a lot of like these moves, because that's why the GDP is negative. And you're seeing a lot of consumer spending kind of slow down significantly, because they are anticipating potentially inflation returning or workforce reduction from anecdotal evidence. They probably have some friends or family got affected by layoffs. You see the lack of hiring in your field. Like, when we began this, Austin, like, what did I say? I was like, capitalism is about to get freaking brutal, and there needs to be a sprint towards wealth. There just has to be. And that's why we wanted to start the series, where we wanted to start sharing our knowledge to the mass audiences, because I did feel like there was somewhat of a sprint. It's not a marathon anymore. I think we're seeing some symbolization on what I was meaning by capitalism is going to get brutal. I think a lot of jobs will get replaced, unfortunately. Like, workforce reduction is a reality. Teams of 10 will turn to teams of 8, teams of 6. It's not going to replace all of them. It's just you're going to see a lot of repetitive tasks that happen across multiple FTEs that don't really need to be the case anymore. And you're going to see a lot of middle management, which is middle America, get removed because you don't really need them. Too many chefs in the kitchen type of thing. You just don't. And there's a lot of tools out there, BI tools especially, that can produce a lot of the requirements needed to dictate future strategy in an enterprise. There just is. And even the most recent government spending cut, a lot of people didn't anticipate how much that's going to affect real estate. Washington, D.C.'s market is in the gutter right now because of the thousands of unemployment. Another one is software stocks. ServiceNow lost a ton. I'm not picking on ServiceNow because they're an incredible company, but they're a perfect example. And there are so many licenses being used by the government for them that really wasn't active. They just didn't really revisit or monitor how active they were using ServiceNow's license. And now they're axing that a bit. So I think you have to be very picky and choosy. Like, for me, like, you guys know how diligent I am with my investments, my portfolio holdings. Like, it takes a lot of conviction, a lot of time for me to buy, name, and hold long term. I'm revisiting a decent amount of names, not a lot, a decent amount, because we are in this defensive environment. We're entering a stage 4 breakdown on the chart. Stage 4 is when you lose all the money you made in stage 2. Stage 2 was 2023, 2024. You can make the argument that we might be in stage 3 still, but like I don't know. I think once we're below the 200-day moving average, stage 4 gets launched. I don't know when we're gonna bottom out because we're in an environment where it just maybe takes one statement from the president or some kind of deal that's made in tariffs. Like I don't know. We're in a
It's
very
such
catalytic
weird, dude.
environment.
It's so mixed too on the buy and sell. Like it's just such a weird mixed bag. It just doesn't make sense, and I don't know. So let's give you these trades because there's a few good questions coming in, so we could talk about. So again, to put it very simply, if you're new, I break down the bull trade and the bear trade, leveraging options for the SPY, so you can make money throughout the week for the next 2 weeks using 2 specific options contracts. So if you want to learn about options and you don't know, again, the link's at the bottom. Make sure you go there first. I would definitely recommend learning something before you try it. But here we are, right here. So what do we do with this? Well, we either come back up and test. Let's go back. Let's go to we're going to do a little differently. We're going to look like the hourly today. We did see some big buying today, right? So now we have a new baseline of what we need to see. Oh, shit. Now we have a new baseline of what we need to see hold. So that way we don't have to worry about where we expect this market to be. So right now the buyers came in force at what is that? 557. So for the time being, 557 is that floor. Below that, all bets are off on how low it can go. And I get it. Yeah, it's not going to go to $12, but you want to be mindful because a lot of times people will have the bull bias and they will fight the truth that is present and available in front of them. And right now, that truth is we are seeking 520s if we continue downward. So let's operate with what we have in front of us. Right now, we have an attempt at a floor at 557. Let's assume that holds and we get a support touch tomorrow. We would be looking at a bullish SPY trade if we hold at support, aiming for 565. $5 move, give or take. Almost nearly an $8 move. So that'll be a significant gain in options. So let me flip over to the options chain here. We're going to go 2 weeks out on our expiration. Very important that we have a little bit of time, but not too much. That puts us at March 24th. Is that it? Yep, March 24th. So again, we're talking about the 565 call for March 24th. Wow, that's inflated. $9.31. But you can go a little closer than that if you have to, but I wouldn't suggest it unless you're very, very comfortable with day trading. So let's look at, okay, let's say we did the 565 call for March 17th expiration. So let's say we just went a week out. We're looking for volatility trades during the day, so day trades. I would be looking at the 565 call. That would be the target because if it escalates, it could go to 571. That would be very good. But we are only liking this trade if first we get a support confirmation here off of today's demand zone. So look at it this way. Buyers came in force, pretty significant volume right here to fight this off and hold the price up. If the buyers can hold that again, I would assume that we're gonna see some upside for at least a day or two. So that's our bull trade, to put it very simply. And again, if you don't follow us on TradingView, just do that because I post all of this analysis and this chart for you to read every night after we're done. It's just Penny Boys, one word. But that's the bullish trade we're looking at. If we go a week out, either or 2 weeks, we're looking at 565 calls. I would be entering this position after we open and support test, when we have confirmation, meaning a candle closing above this line, then I would enter the trade. It would go to 565. We make a lot of money. We have a lot of fun. Now, option 2, the bearish trade. What happens if the price breaks down? Well, if we're going 7 days out, let's look. Honestly, I would say we target a $5 move and we go maybe we close at 560, so maybe 555 would be the move here. 7 days out, 555 puts. That would put your target right about here, just below the lows, and this should clean up and make tons of money. So now let's say the price holds here at support, comes up a little, and then breaks through. I want the same thing, but in reverse. I want confirmation that this is broken down because that 15 to 30 minute candle has opened and or closed right below this line. The close is the important part. As long as it closes below that line, I'm a bear. Lock it in. Let's let it ride. And again, I'd be targeting the 555 puts. Last week, the calls and puts both paid over 100% two different times. Those 4 trades for 100% profit from 2 options contracts. Follow this trading view account and write these down. This is a way to hedge, but also capitalize. If we break down, I think we're going to 555 or lower. And again, I'm personally probably going to put a little more expiration on these because I think the opportunity to go to 545 is there. So I want to make sure I have a little more time to capitalize on a continued move downward so that I don't get screwed over on all of my my long holdings. So that's the gist for the SPY options trades. Again, make sure you write them down or at least follow the account to get the chart. It's right there. Make sure you get them. I think we go into it now because we were talking a little about allocation. I think right now it's far more important than looking at any particular chart. You know, you were talking about earlier that rule of thumb that you kind of have. Okay. So that's the question: is how do we allocate new funds?
Yeah, so it's all different time horizons. I can give you guys a little glimpse into mine specifically, see if you guys relate or are curious. Like I'm definitely pulling back the curtains a bit on my personal life. I shocker alert, I operate my life with software margins, and my fiance absolutely hates that, but I do. I need to have at least 60 to 70% operating margin in my life, and every $100 I make, $60 needs to go towards my pocket. Like I just have to, after expenses, fix, etc. Like that's the way I need to operate life. I need liquidity. I don't know why that is for my way my brain's wired, but I just need that. And if I am underneath that level and I can't really do anything, can't just any expenses, etc. Like I need to find my way to get back above that level. And my fiance really does hate that because I can drive $100,000 car right now. I absolutely can. I can buy jewelry. I can buy clothes. Like I live in LA. I live Beverly Hills is like it's just like spitting distance away from me. I can like really, really go all out on my finances if I wanted to. 31 years old. Like I have no kids. Like this is the time when I should be just ballering out. I don't want that. And it's because of moments like this. Like call me like this is I like when we get these kind of pullback. I'm not saying this is generational opportunity. It's not. Like look at the chart, zoom out. But February 17th, I sent a warning sign to my subscribers, like market warning. I think we're about to enter a small bear market. I didn't know it was going to happen in a matter of weeks, but I was like, I just don't see an avenue where we hit new all-time highs. Like I think we're going to have a 15 to 20% pullback sometime next 12 months. And we're at 13% right now. So I just thought that there was a lot of top signals, and I had some hedges. I also had a 12% cash position. Right now I sold all my hedges. I don't have any more hedges on, but my cash position is 4% now. So I still have some cash, but guess what? I have the way I operate my life. I live way below my means. I put in 1% cash every single week into my portfolio. So when I didn't buy from months of November to February, those 4 months, what did it just indicate to you guys? I put a little less than 1% a week. Essentially, I built that 12% cash position I was talking about. I did it because I just didn't add anything. So if I have a 4% cash position, I keep adding on these dips. Like when the QQQ is down 4%, how often does that occur? I'm going to be adding to my high conviction names. I didn't use all my soldiers, but my cash position went from 6 to 4%. And I'll probably do the same thing tomorrow, knowing I'm going to have more cash coming in next week, just because that's how I operate my life. But I know that's not the same for a lot of the listeners, a lot of investors. So like dictate your behavior on what fits you. Right now, I'm in full defense mode. If I had a fixed capital amount in my portfolio, I would liquidate and have a 15 to 20% cash position on the sidelines and just wait until the noise clears out. That's the way I would operate if I didn't have the cash infusion every week. I think we're breaking down significantly on a lot of these indices. Yep. Feels like it's going to get worse. I don't think we had that capitulation yet in the market of where the New York term bottom has. Maybe today might have been that with QQQ down 4%, but I don't know. Like it felt somewhat controlled, as crazy as that sounds. It just did. It just didn't feel as like what is happening. Like you had Amazon down 3%, you had Apple 4%. Like they're all just like it was a controlled pullback. The VIX is still below 30. It's still really elevated, but just like it felt somewhat controlled. That's not capitulation. Capitulation is the yen carry trade crisis in August when back-to-back days of 5 to 6% over just like the VIX at 60. Everyone is freaking out. We're not there. But we're technically breaking down. So like if you're one of those individuals or investors who just aren't able to put enough cash every single month, you don't have that dry capital infusion every week, you build that dry capital right now. Sell your lower conviction names. I'm sure you have a couple. Build up a 15-20% cash position and just put it on the sidelines until we recover some of these levels, because I don't think we're going to hit all-time highs anytime soon. I really don't. We're not in like I really don't think we're in that V-shaped environment anymore. Like we're just not. It's a new characteristic this year, and it's going to be noisy. It's going to be messy. So plan accordingly. Like, get defensive. Like I would be very defensive as long as we're below the 200-day moving average. End of the day, but I'm buying. Different circumstance. Like everyone has a different circumstance. So like just be realistic. Don't be delusional. Don't experience it 2021, guys. Like don't. You can't just keep buying the dip if you don't have the capital to keep putting in a portfolio every single month. You just don't do that. You can't, because you're going to get busted. And Snowflake right now at 150? It could retest 120. There's no reason it can't. I still think it's significantly undervalued, but there's no reason it can't test prior lows. Or another one is, Amazon. There's no reason Amazon can't test that yen carry trade crisis low, 150, 160. They could. Nobody really knows the bottom when things are breaking down this much. But I'm still adding slowly. But like,
I like Amazon right here for ads 100%. 100%. So we had already mapped out before, you guys, that 189 was like critical. Like that's where the only place we saw any upside was 189. You could tell institutions were accumulating big time. Yen carry trade, they cleaned up, buying that up from 150 very quickly. And before you know it, a month later, it's trading back at the same level. But that's where we've seen this stock really lift off. And I think in a different market, this is at 250. But given the market we're in, I'd say this is for me a buy here. And you can see volume starting to flow in. Like people are getting smart about this one.
Just look at what's the daily chart right now. Look, their daily RSI on Amazon's at 27, guys. Like anything below 30 is oversold. So if you want to look back historically, every single time it's broken 30, it happened in yen carry trade crisis. The low was 25. So we're almost at the yen carry trade crisis low for Amazon on fear.
Someone has asked about Google is also following that trend very similarly. It's quite interesting here. So
yeah, I think we're oversold on the indices. Like let's just go on the QQQ. Let's go on the QQQ level. Let's do the daily chart. I'm seeing right now this I did not know this.
Yeah, it broke out of the shelf we identified too. It's actually Qs are bad.
They're really bad.
Qs are more bear than anything.
We might have an intraday bounce just because like the yen carry trade crisis, the daily RSI was at a 31 on QQQ and bottom. We're at a 28 right now. So we're actually more fearful in QQQ than it was during the yen carry trade crisis. The other time that occurred in the past 3 years, oh my God. January 2022 was the bottom. I forgot. That was like when the bubble bursted. And yeah, at 340 back then, it bounced from 340 to 365. So that was a 5% bounce, but then retested previous lows. Like that was obviously ugly. So I don't know. I feel an intraday bounce a near-term bounce coming, maybe call it dead cat bounce. But I'm not bullish in the market. I'm actually significantly bearish, and it's a new cycle we're in. and you
And how long
guys
do you think
might
it'll last?
months. I don't think it's
Same.
going to be weeks. I think things will die down obviously with volume, etc. in the summer months. So that's why I always say first half. I think July and August are typically dead months already. Like whatever the trend is, it just kind of it feels range boundy, especially when it's like pulling back. But I don't know. Like it's what think about what the next catalyst is going to be, guys. Like you have to think about that. Sure, tariffs, global we're in a deglobalization era right now. So what do I mean by that? I mean tariffs increasing is going to be it's a game of hot potato essentially. Just like they're one-upping each other. That takes some time to iron out. I think ex USA is doing really well this environment. Like just look at China, look at um, European stocks. Like those are kind of the outperformers so far. But time horizon, I'm investing 5+ years out. Like this is kind of the time. I think we're early in the fourth industrial revolution. That's not going anywhere anytime soon. That's just not. Like that's why if we're in a recession, a lot of my investments are somewhat protected because they're in the business spending environments and
Mm-hmm.
they're typically in AI, which is one of the main levers enterprises across the world are looking towards for operational efficiency. So if there is a recession, they can't afford to hire FTEs or the workforce. They're going to have to get creative on innovating their ecosystem. And how do you do that? AI. So like that's why I think AI is somewhat protected. But I don't know, Palantir is still overvalued right now. Like Palantir's at $74. They're still
I will
overvalued.
say we did give you guys the perfect. I believe we outlined 72 and a half as the target on the downside. So when this was still trading at $103, we gave you the 30% move with the exact target. I hope you capitalized on, but also as the level that we will be looking to add more to a position if it makes sense.
Also,
But
guys, like the 200-day
crazy.
moving average for Palantir, it's at $52. Like we're not even close to touching that yet. Like that's how extended Palantir was. And I'm saying like the QQQ is breaking down. Like all the indices are breaking down below the 200-day moving average. Under the hood, a lot of these winners, there's still ways to go. Like I also think that crypto, the reason I'm like, I don't want to buy this Robinhood dip specifically is every single, I don't know, risk on asset has filled that election gap. They just have. Bitcoin hasn't yet. That's Bitcoin's 70,000 for filling that election gap. I just feel like we're going to fill that gap in crypto and Bitcoin. And if that's the case, it's going to drive Robinhood even lower. It's going to drive Coinbase even lower. I still think we haven't had that euphoric stage in the crypto rally. I call me crazy. Like I still don't think we experienced that. You could say the Trump Melania coin was somewhat the top on the sentiment on this crypto rally. That could be the case, but like, did you
I
feel like we
thought
had a
that
blow
was,
off top?
man, right when that happened, I was like, fuck, it's over, man. Like when you see that, it's the old shoe shiner thing. Like when I had people that don't care to invest in the market asking me how to buy a meme coin, like they sought me out, whether it's on Facebook or they have my number, like, hey, dude, I got to get some of that Trump coin. I was like, bro, I bought it at 3, I sold it at 60. Don't touch it. It's over now. It's over. It's done. It's a scam. I mean, come on. It's shiesty. It's done. It's over.
Absolutely shiesty. Here, let me share my screen for this Palantir
Go
chart.
for it.
If you guys don't know, I use TrendSpider. TrendSpider is one of the best platforms out there. It's not even close, in my opinion. Present, share screen. All right. You guys able to see my screen? For some reason, I can't see. I only see Austin. Stop screen. Let me share again.
Now try it again.
Perfecto. All right. Let's get real specific. Let's remove this. This broken. Wow. Actually, right now is a very interesting spot for Palantir. It's at the 21-week EMA level, which is.
Telling you, dude.
Hold on. Let's
We
hide
laid
this.
it out on a golden platter.
So this has gone. Wow. Yeah, I mean, ever since the rally began, like the major. If you guys can make like, first off, this is a textbook of the breakouts followed up with earnings to back it up. Like, look, boom, consolidation. Oh, earnings, boom, consolidation, earnings. This is like what fundamentals backing up with technical breakout happens. But either way, I fundamentally this is way too expensive. Like it is nowhere close. However, for me, I would feel more comfortable.
Buying in the 40s. Just say it.
Yeah, I mean, yeah, 40 shit.
That's where it is too. That's where
you have to
where
fill
it
this
is.
gap. You have to fill this gap right here. I think we fill this gap, which is $44. That's like and you
that
need
is
to
where
look.
demand outpaced everything. So like just looking at people's natural sentiment and cycles, like that's where those same buyers will probably come back.
But guys, this is the issue. Look at this volume pocket right here. This is nuts. There's no one really, I mean, institutions bought up here, clearly. But look at this. Like it needs a range bound site. Like it needs a range bound environment Palantir for it to like really build those volume shelves, get some new, it needs a new profile. Like this happened too quick. And it wasn't really backed up by, it really wasn't backed up by.
Look at that. So go to that last hump on the RSI there, equivalent to the high. You like just highlight right there, that last peak we saw. Go over right a little more.
Oh, right here.
Yeah, right there. So you guys see how the price set an all-time high, but RSI couldn't break out any further. That's called divergence. There's simple things you guys can learn that tell you, it screams to you, this is the top. This is the top. That's why you, for the first time ever, and I know you're good about selling on the way up. But dude, this is one I hadn't sold a lick, and you better believe I closed that out. When I saw 110, I was like, all right.
So one of my favorite technicals to use kind of on TrendSpider, as well as just like any kind of long-term investment, is anchored average VWAP from their IPO. The average volume and price that every investor has bought the stock since they went public in the stock market. That is the best benchmark indicator on any kind of characteristic of a stock. It really only works primarily if they went public past 5 years, for example. Palantir has. So right now at that level, it's at 27. I would love to add to Palantir under $30. I don't think it's ever going to get there, but a boy can dream. And that's like kind of where I would slam I would make this I think I would make this a 20% position if it went to $27, like easily, without doubt. It's not going to get there. So let's play a realistic scenario. Yeah, I mean, if you want to entertain, like if you want a 5% position in Palantir and you want to build substantial, like most of it in mid 40s, low 40s, I think doing a 1% position right here at the 40-week SMA level, which you can make the argument it's the same thing as a
break that down
average.
One step further. When you say a 1% position, what are you saying there?
If you want to invest $5,000 into a stock, put $1,000 at the $55 mark or $51 mark, 52. Honestly, just 50. I think the site, if it gets to 51, 52,
that'd be like
cycle level is 50.
That's like
exactly 20%.
You said 1%. I was confused.
Oh no, if you want to do a 5% position, just do 1% at that level and then add more. Yeah.
Okay, got it.
That's what I meant.
Got it.
So yeah, I mean 20% of your allocate. If you want 5K Palantir, I would do 1,000 at 52. Really, I would try to build. I don't think it's gonna get there. I mean, who knows in this environment? But yeah, I mean, it fills that gap of that was this Q3 earnings? I think it was the Q3 earnings of this is when AIP was like, holy moly, the commercial side's exploding with their governments. A lot of new investors came in over here. A lot of institutions came over here. So I do think this 44, 45 level is great. Regarding HUD, I mean, I don't know. This is like, I'll bring up HUD's thing real quick. I don't know why I left both my arms up. Like, I don't know. I surrender on HUD. But I don't know. I'm like going back and forth with HUD. I'm doing a lot of research in HUD right now because I'm a thematic investor at the end of the day. You guys are fully aware of that. I'm not bullish on fintech. I'm just not. I think it's highly competitive, low margins. It's cyclical. But Robinhood is a tier 1 fintech name, and I think they did something that has never been done before in that space. And they're somewhat infusing being a media company as well as a financial ecosystem, and like there's
It's
a
a multimedia experience, dude. It is.
there's
They have crushed it. They're a branding wet dream.
and there is somewhat of a loyalty associated to your brokerage at the end of the day. I'm sorry, there is. Like, I have a lot of cash in Robinhood. I also have in Fidelity, but like someone in my position should not be used. My position historically would never use Robinhood because it's mainly
No,
for trading and lower. It's just like I
but
don't know.
you always bring it up, and this is what's always been in my head. We never had a chance to talk about it, so I'm glad we're here. But you always talk about, attrition in software. It's difficult. It's either you have a bad product and people leave. If you have a good product, but you can also have a bad product and make it very difficult to leave. And you've seen that in a lot of these software names. But if you have good product, you don't worry about the difficulty. It doesn't matter, right? But I think Robinhood can make that argument as a product that is a good product, but more importantly, that there is we'll call it loyalty, stickiness, lack of desire. You know how many times I've thought about moving my money out of Robinhood? Take a guess at how many times I've moved my money out of Robinhood.
Nada.
Zero. I mean, I've taken profit out when I committed to do it, but it's very different from leaving it all together and putting it somewhere else. And most times I just put it back into other shit anyway. Anyway, that's the point, guys. There is a software stickiness element here that needs to be considered. They're very good at locking you in that ecosystem and building around it. And I think that's very speculative. So, Porter, you clip this, and in 2030, when this happens, you fucking give me some credit. I think a few of these businesses that have kind of their own culture imbued in it from a digital media perspective, which Robinhood definitely does. Look how often we talk about it. It's a fixture in our space. So for us to conduct our business, we almost have to discuss it. It's genius, right? But more importantly, you look at their investment in the Miami Heat and some of these other places. I think they're going to be so big that they're going to start doing consumer experience stuff that with their gold card, they're going to create a financial fucking ecosystem, I think, far greater than what they have now, as long as we don't get a consumer credit collapse.
Which is the biggest if, because it feels like we're trending in that direction.
We are trending. Dude, Wolf just posted something, and I was like, damn, that's no good, dude. Like, that's no good. I think it was at, I'll pull it up here. It was like at an all-time high. I was like, Jesus, this is no good, man. We can't be having this. U.S. credit card debt reaches a jaw-dropping 1.2 trillion. Trillion. Dude.
A firm is screwed. No, I mean, there is so much psychology that goes behind investing. There just is. It's not discussed enough. There just is. Robinhood is feeling like more and more to me, incredible product. I see the ecosystem. I see the mo. I don't know how to value them. I just don't, because like you mentioned the financial ecosystem, multimedia. How do you value them? Like, what's a good benchmark ratio? Like, what's a comp? Like, it's difficult, and especially the cyclical risk associated to them. Like, if we're in a crypto bear market next 3 years, Robinhood will not be going anywhere. It won't be going anywhere.
And that's a risk. I think you and I could come up with something, because I think you take the fundamental analysis you look at a bank with, and I think that applies to them. I think you get some of the multiple action of, kind of multimedia well-branded companies. You could apply that to them. I think you could apply a moat of community based, like, even though they don't have a community function, they are so powerful in branding that their community exists outside of the platform, which is the point. Like, again, here we are talking about it with a community of retail investors. You get my point? So it's like, even though we're not all about like, oh, let's all use Rob, it's still constantly being brought up. I mean, you can make the argument. I think Steve Jobs would have a wet dream if he saw Robinhood. I think he would. I think Steve Jobs would love it, what they've done. I think that their simplicity and continuity is it feels very Apple. It just does. And I think that they've operated their business with some of those same foundational principles, which you got to give them credit for how much hate they put on Vlad Tenev during the Robinhood crisis.
Vlad's incredible.
Financial, like, I don't support or I'm not against. I don't know, man. I'm not a billionaire running a company like this, so who the hell do I know? But what I do know is that markets were near collapse, overall markets. That's why I think people don't get what the GameStop thing did, is it could have put markets out of business, period. Which is cool, but also I don't want to live in a dystopia.
I will say, so, I mean, yeah, the jury's out on Robert. I again, like, I feel like the TM is so big and what they're trying to accomplish that maybe, but also like I don't know, like it's just it's okay to be a stock to not be in your lane and just don't touch it, but like view it in the outside of like with like I root for it. Like I'm rooting for Robinhood because I just
Yeah,
think I love
and
what they did.
if you have a distinct, you brought up. I love that you brought up having the plan part because I think it's essential. Like if that's a name where it's like, man, I just believe and I love it. Make it reasonable. It could be say I got $1,000 in my portfolio. I put $1 in Robinhood a month until I get to $200. It goes a long way. You'd be shocked. And again, compound interest. I think you said it was the ninth wonder of the world. Einstein did, and I think with a name like Robinhood, create a systemic way to buy. If that's a name you want to follow, so he brought up his methodology, right, with certain moving averages or using VWAP from IPO, whatever that is. Figure that out. When it hits, you buy, unless something obviously fundamental changes. Robinhood, going bankrupt, like obviously, you know what I mean. If you get bad news, you get bad news. But as long as you get stays the same, but markets are bad, that's the kind of name to buy into, in my opinion. For me, if that's a name I'm doing that with, personally, not buying more Robinhood right now, because if they go back to $8, then it's dead anyway.
Well, I don't know. Let me see something on Robinhood, for example.
And guys,
I
drop
stopped
your
sharing my
tickers
screen.
in the chat for Smash or Pass.
Okay, let's see what Robinhood's doing right now on the fundamentals. Quality scores is 6.8 on value sense. That is awesome. They still have a good momentum. That's great to see. That momentum hasn't faded too much. All right, let's see the summary. I want to see their fundamentals a bit right now. That's a gnarly. Look at that dip. That is just crazy. I mean, look at these margins. 92% gross margin on Robinhood. That's nuts. That's software margins, like Austin's talking about. You see their net income margins right now. It's 47.5%. So like essentially,
They get
like
$1, they keep 50 cents.
nuts. That really is nuts. Enterprise value. Here's my issue: $35 billion historically is $3 billion. So like they're paying for a trailing 12 months 10 times price of sales, or just say roughly that. What's their top like on the market cap? Do you think there is never been a mega cap financial institution like this that didn't really? I mean, do you think it has like a Visa and MasterCard network and it has a network
Yes.
effect? Because that's what you're claiming. If that's
Yes.
so,
That's where I think it's headed personally. Again, speculative and what the fuck do I know? But it's certain ones you could just see it. You could just see the way that they move through the world. I mean, it's flawless execution, even like with what they're doing with Wolf. That's genius. And they're ambitious enough to do it. They're meeting people where they're at. Like they really are trying to be brand of the people, brokerage of the people, and it's working. More people invest now at age 18 than ever. So I think this is more a question of population than it is of anything else. As long as we're producing more people, they know they're going to have more customers. As long as capital markets exist within reason, they know they'll have more customers. It's just a matter of, does the overarching market structure collapse, which we're talking about a very different, like you better buy some water at that point. But I think as long as, we do status quo, they're going to outpace most.
I mean,
look at that revenue acceleration, dude.
I was gonna say this is a cyclical risk right here. It's nuts. I mean, look at the industry median that's part of as well. Like
right,
the industry is growing at 10%.
5-year historical.
Yeah, I mean,
do they have it?
Yeah, let's see. Jeez, it's so strong. I mean, let's see. I think the best ones over here, because I think right now the industry, their comps are growing at 10%. They're 5xing their comp. So like they're clearly outperforming.
Pull up Adobe on there. Let's get a couple smash or pass in before we wrap up. It's my wife's birthday, so I cannot be late today. But just to see, because I know you love this tool.
Let's see, Adobe.
Adobe actually had an interesting point. Stocks Buddy on the weekly actually called out support here.
They might have a near-term support, but their momentum is bad, which is not surprising. Look at their chart. So they're saying the relative value should be at 697. Interesting. So it is undervalued by 16% on fundamentals. That's interesting. So that leaves room for opportunity, in my opinion. Their margins, I mean,
When Stocks Buddy calls out a monthly buy signal, I'm 100% going. Like that thing is a monster on the monthly. And the last time we traded through this range, we went 330. We doubled to 630. We're trading 435. I think there's another double in there, but I'd be personally happy with 50% to 600. I can live with that.
I mean, yeah, I think it's. I mean, intrinsic value looks undervalued. Let's see what the chart is real quick. Oh, no wonder it has no momentum. It is under every single. Maybe it changed on the monthly. You're right. Let's see.
Wow, dude. Stocks Buddy's a savage, dude, with this auto-calculating stop loss. I put it for Tesla on the monthly at 220, 221. So we're there.
Jeez.
Spooky.
All right, what's the next ticker? Which one should we do next?
Let's do to CAC. I'll give you a little play. EPR. No idea what this is. EPR properties.
EPR.
Yeah, EPR. This chart actually is pretty crisp.
Wow. I don't know what this is, but
this chart is gold, dude. Why? That's the question, though.
I don't know. I've never. I mean, yeah, it's. There might be a. Wow. I mean, this. It needs a clear. What is this? $56.
Yeah.
If it does.
over 57, it goes to 80 though.
Yeah.
There's a huge liquidity.
Oh,
yeah, it's a gap filler if I've ever seen one. But it's just the question is, what has the business done to change to justify? Because that's the thing I realized when I see a setup that tickles my balls and you go, oh my God, they've accelerated growth, blah, blah, blah. You do your thing with all the, like, you go look at the fundamental aspect. Whenever we're aligned in that, dude, winner, guaranteed winner. No results guaranteed, but it's as close as you could be.
It is true. You have both sides working.
Take a little peek at that one because that chart is screaming, "Daddy, Daddy, please." I'm ready.
All right, we have one more ticker before Austin has to go. Do the B-Day shenanigans. Which one should it be?
It's her. Yeah, I can't say the age, but it's a big birthday. It's a big one.
21. What?
No, no. I went the other way. Let's do Caterpillar. It's a stable name that I sold at the absolute bottom during COVID.
So this is a defense stock name, guys, and especially in a tariff war because holy moly, U.S. manufacturing, they own a lot of it. I mean, they're also somewhat cyclical, but I think they're doing fine. Yeah, I mean, it's a strong score on growth, profitability, momentum. Yeah, they're just such a solid stuff. They're only worth $200 billion. Why did I think it was going to be more? So this shows that they have a lot of debt potentially, which is interesting. We won't get
sure all that equipment stuff. What I wonder is if they finance the equipment with their, because if they offer financing options for their equipment, they're also essentially change. It's an interesting aspect of their business model I never thought of. Turns them into a financial institution almost.
I mean, it does. It's like the Starbucks ecosystem.
It's interesting. Yeah, I think so. You look at these companies, you find these little. I mean, one of the best marketers of all time is a guy named Alan Sultanic. He always talks about the hidden economics of a business determine its positioning. And like if you can build solid hidden economics, meaning something but the world doesn't, into your business, it can get interesting. So I'm sure that some genius figured out, oh my God, why are we using the bank? We can capture, X amount of points and the default rate is low. Let's just do this. I don't know if they do that per se, but that'd be, if they don't, Caterpillar, call me.
Well, I will say, look, their valuation earnings multiple, like this is clearly, I don't know why they're not GAAP profitable, but 2018.
That's got to be an error.
So look at this. 13, 40, 22, like they're at 16, so they're not too expensive.
It's reasonable, but I think that one's an interesting one. All right, I love y'all. I got to stay married, so I got to go.
See you next week.
SPY trades and follow those strategies. The goal of this was when the markets are bad, we need to slow down a little bit and take stock of the strategy that we're deploying because that's going to define your outcome more than anything else. Consistency always wins. So if you guys need more help, again, jump in the Discord. You can follow Shay on Twitter, Stocks Heavy Shay. You can follow everything that he's been doing directly through his portfolio. You can sign up and get his earnings reads, everything you want and more. So do that. Get access to the information and then put an hour a week into it. Take it fucking seriously. This is your future, dude. Take it seriously. Like, I wish someone had sat me down at 18 and said that. You know, because it's life-changing. 10 years is life-changing. So if you're young, you're old, doesn't matter. Those extra couple years can be the matter of thousands, tens of thousands, or hundreds of thousands, depending on what you do. So take advantage. I love y'all. Stay blessed. Bye-bye.